Good afternoon, and thank you for joining CDP and VitalMetrics for our webinar on Scope 3, using financial data to measure environmental performance. We are thrilled to have our U.S. climate change consultancy partner, VitalMetrics, here with us today. This webinar will explore how to prioritize supply chain strategies and quantify Scope 3 emissions using VitalMetrics methodology. My name is Camila Montes de Oca. I work out of CDP North America's New York office on the partnerships team. CDP is an international nonprofit organization that has the largest global platform of environmental data that we collect from companies and cities on behalf of investors and large purchasers. The format of this webinar will be a presentation followed by a Q&A session at the end. The webinar will be recorded and distributed to attendees after the session, and you are welcome to submit your questions throughout the presentation using the Q&A box on the right-hand side of your screen. If you would like to address a particular presenter or CDP in general, please note that in your question and we will follow up after the webinar. With that, it is my pleasure to introduce Dr. Joe Bergeson, Director of Research for VitalMetrics, who will provide some more information about VitalMetrics' work and introduce our speakers. Thank you all very much for being here today, and now I'll pass to Joe to get started. Joe?
Thank you, Camilla. Good morning, everyone. Thank you for joining us for this webinar on Scope 3. I'm happy to introduce the speakers who will be talking about using financial data to measure Scope 3 GHG emissions. If at any point you have questions, please type them in the Q&A box and we'll field those all at the end. So we look forward to hearing your feedback and responses. If you have any questions after this webinar, please contact us at the email that's on the screen, info@vitalmetrics-cdp.com. We'll be happy to get back to you shortly. Just first a little bit about VitalMetrics. We were founded in 2005, and our goal and our mission is science-based sustainability measurement. With that, we have been a climate change consultancy partner of CDP, and we are recognized for our work in corporate sustainability measurement. In particular, looking at the supply chain, looking at Scope 3 is our specialty. We've won awards in doing this kind of analysis for both government agencies like the U.S. General Services Administration and large Fortune 500 companies as well. And we are excited to share with you some of our knowledge and expertise on Scope 3. And with that, I'd like to turn it over first to CDP before you'll hear from my colleague Summer Brooks-Smith, who will be presenting today. So with that, I'd like to present Ian Erskine from CDP.
Thank you, Joe, and thank you for VitalMetrics for the opportunity to speak today. So my name is Ian Erskine. I work in CDP's head office in London. I'm a technical officer focusing on climate change for scoring and also questionnaire development. Previously, I had an MSc in environmental technology where I focused on climate change and environmental economics. So as we said, CDP was a global non-profit, regional offices and partners across 50 countries worldwide, with responding companies across 90 countries. I think last year in the investor program, we had over 2,500 companies responding. So we really are quite a global reach for a non-profit. So if I just tackle the first key message related to Scope 3 emissions today. And that is there a big change in the Scope 3 CDP methodology for 2017? In a nutshell, no, there are no major changes to Scope 3. We have, however, restructured 14.4, and this is to improve the data quality of that question. Just as a reminder, refresher, CC 14.4 is, do you engage with any of the elements of your value chain on greenhouse gas emissions and climate change strategies? So for this, we've combined CC 14.4b and 14.4c into a table question this year. And this is dependent on the options that you select in 14.4. So 14.4b will not appear if you select the yes, our customers, and or yes, other partners in the value chain option. 14.4a and b will appear if you select the yes, our suppliers option. So very, very minimal in terms of changes to our approach this year. So Now just looking at the second key message today, and is Scope 3 reporting critical for achieving a high CDP score? So if we just take a step back to that, and we'll just briefly cover how CDP score is calculated, just to give some sort of basic knowledge and reaffirm how important it is to respond throughout the questionnaire and throughout this Scope 3 section. So the 4 levels represent the steps on a company's journey to being a good environmental steward. The CDP score will give a clear picture of what a company's current level is with respect to environmental stewardship, and importantly, what action and areas to sort of focus on next. Each level has a different emphasis. For disclosure level, the response should demonstrate completeness. For awareness level, basic knowledge. For management level, action. And for leadership, best practice. A minimum score or threshold must be achieved in one level before a company can be scored in the next level. And this threshold is provisionally set at 80% for that higher level. So that's gone up from 75% in 2016. Each final letter score corresponds to a level, and there are 2 bands per level. So to go back to the initial question, is Scope 3 critical for a CDP score? And that answer is yes, absolutely. So if we just look at the sort of percentages for that CDP score this year, so that's 12 percentage points in the Scope 3 section are related to disclosure score, 13% in awareness, 13% again for management, and 9% for leadership. So such a huge volume for this section. Just have sort of a refresher on the questions that are involved in Scope 3 for this year. So that's 14.1 is the sources of Scope 3 emissions. 14.42 and 0.28 is the verification of those Scope 3 emissions. The 14.3 Scope 3 emissions performance, and finally 14.4A to C is Scope 3 engagement. And as you can see, and I'm sure you're aware, that these questions are scored throughout these levels, and really reaffirm how important it is to answer these questions properly so that you can achieve a good score. Finally, the one point I'd like to make is that I'm sure all of you are aware of our Science-Based Targets Initiative program to validate your absolute intensity targets, but Scope 3 is an absolutely critical and crucial component of that validation process. And inherently this year, our data show that the single largest reason for why the majority of targets were rejected from the Science-Based Target Initiative were down to Scope 3 emissions and Scope 3 lack of accounting. So while these targets questions are not directly scored or explicitly mentioned in the scoring methodology here, it can have an absolutely major bearing and impact on your final CDP score. So it's absolutely critical that Scope 3 is accounted throughout the process. That's everything from me. Kept it very short and sweet, but thank you very much. I'd love to pass you on to Summer. Thank you. Summer, I think might be muted.
Yep, I got it. Thank you. Thank you, Ian, for that great overview of CDP Scope 3, and hello, everyone. So let's see here. So the reason that measuring Scope 3 is so important is that supply chain emissions make up the majority of an organization's total impact. So CDP reports that on average, supply chain emissions are about 4 times greater than an organization's direct operational emissions. And this can mean that it can be challenging to measure and report all Scope 3 emissions. And this actually makes it the least reported emission scope of the 3. So since the CDP season is currently underway, you may be asking, is it already too late to measure and report Scope 3 for the 2017 CDP disclosure season? But have no fear, it is not too late. there is still time to measure your Scope 3 emissions for this CDP season. But if Scope 3 is so challenging, you might also be asking, where do I start? So this cartoon is a great depiction of the initial problem of Scope 3 measurement. So we often try to jump right in and focus on a particular piece of Scope 3 or our supply chain rather than looking at the overall big picture. So for example, if you were to focus on measuring the supply chain emissions of, say, packaging, you might be the guy that's looking at the tail rather than actually seeing the whole elephant. And so, as you can see on this graph, the Scope 3 emissions from packaging are actually quite low compared to many other raw materials or services that are used along the supply chain. So if you were to spend all of your effort focusing on just packaging for this sample organization, you would see that you'd only be capturing about 4% of the Scope 3 emissions, and you may never even realize that raw material 1 is actually contributing about 35% of those Scope 3 emissions that are coming from purchased goods and services. So Scope 3 is actually comprised of 15 different categories that include both upstream and downstream greenhouse gas emissions. The upstream emissions, as seen on the left here, are those emissions coming from activities that occur prior to production operations, while downstream emissions that are on the right are those emissions from all activities occurring post-production. So with so many types of Scope 3 emissions, it could really take years to accurately measure them all. So then how can we effectively measure these Scope 3 emissions in a timely manner? So one solution to addressing this problem is a method called spend analysis. So spend analysis relies on readily available data that's taken from an organization's general spend ledger. Once this is collected, this financial data is then matched to pre-calculated emissions factors, and these convert the financial data to measurements of the environmental or social impacts associated with that spend. So some of these impacts include things like water use, resource consumption, energy use, human health impacts, or in the case of CDP, greenhouse gas emissions. So this rapid and efficient approach to measuring supply chain impacts means that verifiable Scope 3 reports can be provided in just 4 weeks, which is much shorter than that several-year time frame that I mentioned earlier. So through spend analysis, typically organizations find that just a few of those 15 Scope 3 categories really dominate their total supply chain emissions. So here's an example here from a company that VitalMetrics worked with last year. They were a leading international provider of heating, cooling, and refrigeration equipment, and we helped them quantify their Scope 3 emissions for their CDP report. So this was the first time that the multi-billion-dollar company had reported the CDP. And as you can see in this chart here, which shows the breakdown and relative contributions of the different Scope 3 categories, you can see that purchased goods and services comprise the overwhelming majority of their Scope 3 emissions. And so using spend analysis, VitalMetrics was able to quantify these emissions and provide a CDP-ready report to this company in just 4 weeks from the initial sign of contract. And additionally, reporting Scope 3 actually helped this company earn a CDP score of A- last year, which is pretty impressive for its first time reporting CDP. So how exactly does this process work? So first, we start by collecting your organization's financial data from your general spend ledger. And then after initial review, we help you put this data together and enter all the information into our user-friendly online data collection tool. And so once we've received all that relevant spend data, we use our proprietary database to match the spend to those appropriate emissions factors using industry average data. So the peer-reviewed database that we use is called CDP, or the Comprehensive Environmental Data Archive. And it's a recognized data source from WRI GHG Protocol and includes sector-specific materiality values for over 400 industry sectors. And so the results generated from this process are therefore verification ready and can be directly used to populate your CDP climate change questionnaire. And so now I'd just like to give you a brief look into our web-based data collection tool. So as you can see here, there's a list of all those 15 Scope 3 categories. And right here, we're looking at just the purchased goods and services category. So first, you would be presented with some simple yes or no questions, just so to get an idea of the types of activities that your organization has. And then based on your answers to these questions, the tool will pull up different fields where you can enter your organization's spend data, as you can see here. And so this would have lists of different priority categories and inputs, things like that. And as I mentioned, it does cover all 15 Scope 3 categories. So as you can see here, this one is for business travel and mentions all the different types of travel categories that your organization might be using. All right, and so I'd like to just hone in on one of these emissions or Scope 3 emissions categories and take a little bit of a deeper dive about how this tool works and what the different fields mean. All right, so when we look at the purchased goods and services category, in this case, we are looking at a fictional candy company. And the tool here, if you were to mark that you were a candy company, the tool will guide you through the process by displaying typical priority inputs that are specific to your industry. So we've already done this work beforehand on the back end, and this makes data collection extremely efficient for your organization. So as you can see down at the bottom, these typical priority categories for a candy company would be things like basic organic chemicals, corn milling products, and sugar, and things like that. And it also provides an estimate of a typical range for organizations in your industry of what they usually spend on those categories, so you have a frame of reference. And so what's great about the tool is that if you're going through and populating the fields with your financial data, and something seems like it doesn't really fit into those typical ranges, the tool actually has a self-check capability and will send you a little warning sign to say, hey, we've noticed that maybe this isn't typical of how most industries are. Maybe you should just double check that. So it's really helpful as a user interface. Additionally, if your organization uses inputs that may be atypical of your industry, the tool also allows you to manually select and enter those materiality inputs. So as you can see at the top portion here where it says user-defined categories, there's sections with drop-down menus where you can select the group and subgroup and product category of any atypical materials that you might be using. And so, a great example for this candy company is that, the second one down says manufacturing, paper products, and then coated and laminated products, paper products. So that would be, wrappers and things like that for this company. And then they are also able to enter your spend data for that. All right. So now we've given you a brief overview of the importance of Scope 3 emissions and how to use financial data to measure these emissions. But understanding your environmental impact isn't the only benefit of measuring and reporting supply chain emissions. There's actually quite a number of benefits of reporting Scope 3. So these are things like risk management, in addition to really showcasing that sustainability, stewardship, and environmental leadership. Once you measure your Scope 3, your supply chain emissions, you also can identify inefficiencies along your supply chain and therefore take actions to reduce your costs, helping you track your performance. Also, additionally, understanding your supply chain impacts really increases that transparency of your organization, which can be incredibly helpful for things like investor relations, brand recognition, or customer loyalty. As particularly investors are really looking to see that sustainability showcasing from organizations. So if you found this helpful, we've discussed a little bit about financial data and how you can use it to measure those Scope 3 impacts. I welcome you to join us for our next webinar that we'll be holding on March 13th. This will be a little bit broader scope of how to improve and maximize your 2017 CDP score, including those other scopes 1 and 2. So we'll be doing this at 10 a.m. Pacific Standard Time on March 13th. And we'll also discuss some of the updates to the 2017 questionnaire. And also, we want to give a little overview of some big changes that will be happening in CDP coming up in the fourth quarter of 2017 for the 2018 reporting season. And so that program is called Reimagining Disclosure, and it's going to change the way that organizations will report their greenhouse gas emissions to CDP. Also, if you'd like a little more information about VitalMetrics and our CDP services, or VitalMetrics as a group, you can visit our website at vitalmetrics.cdp.com. And I'd like to conclude today's webinar before we go to Q&A with just a quick recap of our 3 key messages that we mentioned today. So as Ian discussed, there's no major changes to the 2017 CDP methodology. So luckily, the 2016 had some big shifts, but all those shifts, minor a few small changes, will still be relevant in this reporting season. Also, as Ian discussed, Scope 3, quantifying and measuring your Scope 3 emissions is really critical for achieving a high CDP score. So it should be noted that it doesn't guarantee a high score, but it drastically improves your CDP reporting. And it does make up those large portions of the individual scoring categories. And again, as a reminder, it's not too late to measure and report your Scope 3. And we've provided you with some excellent tools and ideas for using your financial data to rapidly and efficiently understand your Scope 3 emissions. All right, and with that, I would like to turn it over to Joe to lead the Q&A.
Great, thank you so much, Summer. I hope you've all found this very helpful. And we've gotten a couple questions, but if you have any more questions, please type them in now. We'd be happy to answer them for you. But I can start with some of the questions that we already have. So one is, for people who are new to the CDP Scope 3 methodology and the categories included, would it be possible to elaborate on the differences between the categories, for instance, upstream transportation and distribution and downstream transportation and distribution? What are some examples of those and how they could be quantified? Summer, would you like to answer that?
I'm sorry, would you mind repeating the question just for a second?
Yeah, so for people who are new to the CDP Scope 3 methodology and the categories, what are the differences between categories like upstream transportation and distribution and downstream transportation and distribution, and maybe provide some some examples?
Sure. Okay, great. Thank you, Joe. So that's a great question. So Scope 3 is separated into those upstream and downstream to identify the activities that occur on either side of operations and production. So upstream transportation and distribution would be all that transportation emissions that occur prior to a company's production. If they were making a product, it would be all the things that would occur prior to making that product, such as the transportation of raw materials or any other inputs that they might be using. And then downstream transportation would be post that product production. It would be any of the transportation needs and emissions coming from those that would be related to, say, shipping the product to retailers or to end users. So it's really just about differentiating on either side of that production phase.
Great, thank you. So for example, I wonder if would you be able to use, would someone have to collect information on, well, how many miles or kilometers is this being transported, or would they be able to use financial data to, or general ledger data that we have to understand that?
That is a great question. So there's actually a few different methods for, say, for upstream or downstream transportation. You certainly could use spend analysis for this, as it'd be very, very easy to do. And all you would need to know is the amount of the amount that your organization has spent on things like fuel. And so then you can easily convert that into those emissions. Alternatively, you could also use the distance-based method if you only have a very few activities related to transportation, and that would just be using average data compared to emissions per mile, say. But if you're using a lot of transportation services, it's really best to do that spend analysis, since it works for a fuel, on a purchasing of fuel basis.
Great, thank you. So we have kind of a follow-up question for that from Andy Cuthbert. Does this lead to any double counting if suppliers and, I guess, him report for instance, Scope 3 emissions in general, or maybe transportation in particular? I guess that would be my follow-up question to the person who posed the question. I think I might be able to answer that. So I guess the question is, if you are involved in the CDP supply chain and your suppliers are also reporting to CDP, does that lead to double counting? And I think that the answer is, well, for instance, if I have a company and I report my Scope 1 and 2 emissions and then also my Scope 3, my suppliers' Scope 1 and 2 emissions are part of my Scope 3 emissions. Scope 3 in general is always double counting someone's Scope 1 and 2 emissions. There's definitely, you could look at it on a case-by-case situation to understand, well, where would there possibly be any double counting? But I think, if your suppliers are reporting, then that provides a great opportunity to use primary data from those suppliers to understand, rather than what the industry average emissions are for a supplier in that industry, what is your supplier's specific greenhouse gas profile look like? Which I think, so the method that we talk about, which is spend analysis, can be combined with, collecting primary data from suppliers, and really that strengthens it. And if you use this sort of what we'd call a hybrid approach. And I think one important note is that you can't calculate the total national emissions by, for instance, summing up Scope 1, 2, and 3 from all the companies in a country, for instance, because that would double count. But that's not the objective of CDP. The objective of CDP is to focus on the management and the understanding of what emissions are occurring in your supply chain, and exploring what strategies you might be able to use to reduce those, and what kinds of engagement with your suppliers. I don't know if Ian or Camilla might have anything to add in that regard.
No, I think from CDP's perspective, Jay, you absolutely nailed that question. That's absolutely spot on. Yeah.
Great, thank you. So I had another question that just popped up. So one, we mentioned science-based targets, and so Caroline is mentioning that some companies had their science-based targets proposals rejected because of their Scope 3 emissions. And can we elaborate on what was the reason for that? Was it that the target was not ambitious enough, or what? So maybe Ian, do you have any insights on that?
Yeah. So Caroline, it was basically a combination of both. That there was no Scope 3 target even submitted, but the main reason was that the Scope 3 targets that people and companies were submitting to be validated were simply not ambitious enough. Sometimes they hadn't properly accounted for all of their Scope 3 sources, and they had their ambitious target was something potentially relatively straightforward that only took up a minor part of their total Scope 3 emissions. So for this aspect, it's fairly the first filter that the Sciencebased target is on the Scope 3 emissions, and yeah, it was the main reason was because of lack of ambition.
Great, thank you, Ian. So yeah, we're still, fielding questions. If you want to type anything in there, I'm monitoring that. But I have a couple other questions that we can discuss. So we talked about, for instance, VitalMetrics uses our proprietary database called CDP to calculate Scope 3 emissions for different industry sectors that you purchase from. Could we elaborate on the underlying methodology for these emissions calculations? And is it something that is generally accepted? Is it something that is verifiable? Summer, would you like to speak to that?
Sure. So I can talk a little bit about that. So the methodology within CDP uses an environmentally extended economic input-output table, and so it aggregates a lot of very verifiable data from credible sources such as the EPA and places like that, and it's been recognized globally as the most comprehensive input-output environmentally extended database. And as I mentioned earlier, it's actually been recognized as a verifiable source from the World Resource Institute Greenhouse Gas Protocol. So I would say that the information that's put through CDP is extensively peer-reviewed, and it's been used by a number of government agencies, and so as well as private sector. So this data coming from CDP is incredibly sound and verifiable. I don't know, Joe, if there's anything you'd like to add to that as well.
Yeah, so we have experience. We've worked with clients who have engaged in the third-party verification step of for their CDP reporting, and it has worked out incredibly well. And it's we have worked with those third-party verifiers, and it's something that is very easy to do. So for instance, one of our clients that we worked with last year, included verification. I think it was the same client that Summer mentioned earlier in her presentation. And then they worked with Bureau Veritas, which is one of the highly regarded verification companies doing this kinds of scopes 1, 2, and 3 verification. And so our methods are familiar to the people who do this verification. So it's nothing new, and it won't be anything surprising. Great. Does anyone have any follow-up questions for that? No. So maybe this is something, I think we touched on this a little bit, and Ian mentioned it, but this webinar is focused on Scope 3, but sort of as compared to Scopes 1 and 2, how much of a difference in points would Scope 3 reporting make? I know Ian showed some percentages, but and certainly it's a range. There's some uncertainty there, but when I guess what is the difference that it would really make for a company in boosting their score? Ian, would you like to cover that, or Camilla?
Yeah, I'm happy to give a shot. Well, it can have a massive impact now that the thresholds have been increased. So simply prior to this, we had companies who were not considering Scope 3 at all, but now the fact that it's such a critical component, it's so heavily weighted this year. And with this, like I said, the thresholds going up to make that high threshold 80%, it really reaffirms that companies need to, even if they want to be considered for a score out of the disclosure level, they really need to start taking Scope 3 reporting a lot more seriously. And it can even be the difference now between a score at disclosure level and all the way up to leadership. So it's yeah, absolutely critical.
Great, thank you. And another thing to mention is that the GHG Protocol, which is the basis for kind of the reporting framework for, Scope 3 emissions and Scope 1 and 2, recognizes our method, which is, generally input-output greenhouse gas accounting or life cycle assessment method. So it's nothing terribly new, or it's not a fly-by-night method. It's something that's been established in both the scientific literature and has been applied in many instances throughout government and private sector for a very long time. So I think we're running short on questions, but if anybody would like to pose any, please do so now. We hope that this has been informative, and we hope that it's been helpful for you. We're very open to talking with you more. We've shown our website, VitalMetrics-CDP, on the website. Oh, it looks like I'm getting a couple other questions, so we can continue. But please contact us at info@vitalmetrics-cdp.com. There's our yeah. So one more question from the audience. And this is probably for Ian and CDP. So what percentage of CDP disclosure is done by the public sector? Ian, would you like to cover that?
When you say done by the public sector, is it non-corporation, or just so I can understand your question?
Yeah, can maybe whoever asked this question can clarify? I think because we have I guess cities and government organizations besides private companies who respond to CDP.
Yeah, absolutely. I mean, I can't give the exact figure, mainly because the focus I work on is with corporations for our investor-led climate change program. But certainly for cities this year, they have over 560 new cities reporting to CDP this year. Also for our supply chain program, a number of public sector organizations and cities and sort of states and regions are now asking their suppliers to respond to CDP through that program. I think it's also the, I can't remember the exact name, but the US, not federal government, but the, I can't remember, not the White House, but federal government also ask their suppliers to respond to CDP now. So, I mean, this is hugely a growing important sector for CDP this year, and one that we want to reinforce and improve on in the future.
Great, thank you so much. There was one final question. It was, what is the motivation or point in answering the supply chain questionnaire? So I think they mean that if you're a supplier and your client asks you to disclose, what is the motivation for that? Maybe Ian and Camilla can speak to that.
Yep, I'm happy to answer. So we have our investor-led program and our supply chain-led program. Investor-led means that the companies that are corporations that are requested to respond to that program are asked to through CDP from a variety of investors and financial institutions, whereas the supply chain program asks the exact same questionnaire, but they ask their customers to respond to CDP on behalf of them. So it's more of a more corporate-driven as opposed to an investor-driven perspective.
Great, thank you very much. We have a couple people asking, what is the approximate cost of kind of the service that we provide? I think, we don't need to discuss that right now, but you feel free to email us, and we can get back to you very promptly, and with some ideas after hearing from you and your needs. And if anyone has any final questions, I'd love to answer them, or our panel would love to answer them. Otherwise, I think we can wrap up soon.
Great. So we can just give it another minute or so. Again, everyone, feel free to submit your questions through the Q&A box, or you can send them to me, the host, privately through the chat function. And we'll just give it another minute or so for anyone that's typing now.
Great. Yeah, and we're happy to chat with any of you bilaterally after this. Follow up with you if you have any questions about anything we talked about. We're happy to talk, and would love to hear your feedback.
Great. Well, thank you all very much for joining. We will be sure to follow up after this webinar for any questions that weren't answered. We will also be sending out a recording of the webinar along with the slides within the next couple of days. My contact information will be available in that email, so if you have any follow-up questions for either CDP or any of the presenters, just feel free to contact me directly and I will put you in touch. If not, you can also email their email address that is presented on the slide here. I wanted to give a special thanks to our partner, VitalMetrics, for coordinating the content of today's webinar. And thank you again to Summer, Joe, and Ian for sharing your insights. It really made for an interesting discussion. We appreciate it. And thank you everyone who was able to join and send through questions and engage with us today. Please be sure to check out our website at www.cdp.net for the latest updates on upcoming webinars and events. Thank you again, and have a wonderful day, everyone.
Thank you so much.
Thank you.
Thank you.
Thank you.